Deputy Creighton, 5 minutes.
Thank you very much, and welcome, and thank you for the answers that you have given, both in writing and orally so far. Just a few questions. I suppose I would like to start by echoing Senator Barrett's view on the central bank's new mortgage deposit and loan to earnings ratios, how crucial these standards are, the fact that they can insulate us against future boom-bust cycles, and the need for the banks to get behind that. And I don't just mean AIB, I mean right across the sector. I think that some of the response to date has been most disappointing. I want to congratulate AIB on the work that is ongoing with IMHO. I think it's really constructive. I think it's working well. I suppose where my concern lies is with the huge amount of impaired SME loans that are still on your books. I'm sure it's already been mentioned, but as I understand it from the answers that you've given, 4.4 billion is the current amount of impaired loans on your books. That's reduced by 9% since December 2013. That's welcome. But I suppose what I'm wondering is there any thought being given to an IMHO style solution where people can have, business owners can have some form of independent representation? Obviously, one of the biggest drags on the economy at the moment is this overhang of debt for business. The growth in the economy that we have seen to date is largely led by exports and foreign direct investment, and not by the indigenous economy. So there is a real need and obviously an interest for banks to do something about that. Examinership process is not working for SMEs, even with the new legislation. It's just not working. It's too expensive. So I think AIB has an opportunity to lead in trying to find a solution to assist SMEs in a meaningful way. Apologies. And I'd like to hear your views on that.
Okay, thank you, Deputy. I think in particular around the SMEs, how long it's going to take to execute on our progress and initiatives around advice. I'd ask our Head of Arrears to comment, Brendan.
Sure. I would point out at the outset, in terms of examinership, the vast majority of SME debt in the country is drawn in personal names rather than in corporate entities. So examinership, unfortunately, for a lot of people, is not an option. We deal, if you take out the consumer mortgages part of it, we deal with approximately 20 billion of challenged debt. Some of it is impaired, most of it is impaired, and some of it is not. The figures Mark referred to earlier is a reduction of approximately 4.5 billion in that impaired debt over the last 9 months. That 4.5 billion comes about by doing restructurings with customer and recognising that some of the debt will not be recoverable. So the write-down that's in place. We have, as of the end of September, made offers in respect to that 20 billion of debt to approximately 16 billion of it. So we have issued either heads of terms to these customers, 80 to 85% of which are accepted. And we will more than likely end up in a legal resolution with the rest. But there is quite a strong advisory core out there, but you're largely dealing with non-core debt. So it doesn't lend itself to examinership. It also has a very entangled nature between personal property, buy-to-let, sometimes wrapped up in pension mortgages, SMEs. But I would say is we would expect that by the end of next year, not only will we have offered everybody a resolution, and we will ultimately have restructured, documented, fulfilled and drawn down those restructures in large part by the end of next year. So we've made a very significant amount of progress in the last 9 months, and now that activity is actually manifests itself as the reduction in non-performing loans that you see in the balance sheet today. They're restructured, drawn deals where customers subject to performance will be able to get on with the rest of their lives and start their businesses or do whatever they need to do.
And just specifically on the idea of some sort of an independent entity along the lines of IMHO, is that something that you would consider? I appreciate that advice is offered by the bank, but sometimes there needs to be an interlocutor.
There is. It would be a exponentially more complex proposition because of the nature of the debt. Typically, the IMHO, and I think one of the reasons it works so successfully, is entirely focused, singularly focused on the home, family home, the mortgage, one asset.
Okay.
Very difficult on the other one. We're not against it, don't get me wrong, but I think it would be a huge investment by somebody, and I think probably we'll be finished by the time you'd get it done.
Okay. I know that others have raised the issue of variable mortgages, and I just wanted to ask specifically, because this has been something that has been raised in the courts in recent times, and I'm just curious to know whether it applies to AIB. But so what I want to ask is whether it has been common, or was common during the boom years, if you like, to include a clause in the mortgage that linked the change in interest rates of the mortgage to market conditions. I suppose, you know, that's really the essence of my question.
Deputy, Pervin, do you want to discuss that?
Yeah, so without getting into the specifics of any issues that's involved in a court case, I think every institution has its own language, and it is different on institution to institution. I think the issue that's been examined at the moment, notwithstanding TV coverage, is actually a very specific issue in a very specific institution. So I think it probably isn't right to extrapolate the individual issue that exists at the moment into the broader context. That's based on my observation of where this is.
Yeah, well, I suppose just what I'm asking is what would be the standard, well, just because it is the same question.
Yeah.
Just what would be the standard clause in a mortgage? I mean, is there anything that explains or gives any particular logic to why mortgage interest rates would go up or down? That's really...
There is generally a reference to funding cost in all agreements of some description.
Okay.
I think, David, we're trying to get that clear by offering a wide range of products and a whole lot of explanation behind those. So our fixed rate, as we were explaining to people earlier, is at 3.5%. So that kind of thing, which is 40% of our people today taking out mortgages are at the 3.5%. So you can't dictate to the customer what they do, but you must offer the choice and flexibility, and then offer the advice behind that. And so it's professional advisors in each case across that spectrum of product.